Now, back in the mid 1800s, the Indian telecommunication saga began with the installation of an experimental electric telegraph line between Kolkata and the Diamond Harbour in West Bengal. Now, just picture it, Morse code messages whizzing across India over 150 years ago, laying the groundwork for what was to come. Now let's zoom ahead to 1995, a landmark year in the Indian telecom industry. It marked the dawn of mobile communication in the country with the very first mobile phone call. Now fast forward to the present day, and India's telecom industry ranks as the second largest globally. Now that's quite a journey from Morse code to smartphones, don't you think? Now in this episode of The Third Empire, we will explore the immense potential of India's telecom industry and the major players competing for a higher market share in this highly competitive as well as highly regulated market. We will also focus on two contrasting telecom companies, namely Airtel as well as Vodafone. Lastly, we will discuss what you as an investor need to consider before diving into the telecom sector. So stay tuned, you're watching Informed Investor, The Third Empire, an initiative by Equentis Research and Ranking. Let's begin. The telecom industry holds immense significance in India's economy, contributing a hefty 6.5% to our overall GDP. Now, it's not just about making calls anymore, it's about driving economic growth and innovation. Now, the telecom sector serves as a vital infrastructure pillar for various industries, including e-commerce, media, finance, IT, healthcare, transportation, and logistics as well. Now, over the years, telecom has evolved continuously, embracing advanced technologies and expanding its global footprint. And when the COVID-19 pandemic hit us, telecom emerged as the lifeline, enabling us to stay connected despite the challenges of the widespread lockdowns. Now, looking at some data and the immense potential the telecom industry has to offer, let's talk about this. As of December 2023, India's total telecom subscriber base reached an impressive 1,190.33 million people, encompassing both wireless as well as wireline connections. Rural areas constituted 44.34% of these subscribers, with the remaining majority situated in urban regions. Now, remarkably, wireline or the wired subscribers accounted for only 2.6% of the total, indicating a clear preference for wireless services amongst the consumers. Now, this preference aligns with the growing trend of mobility and convenience associated with wireless technology. Now, the growth of the mobile telecom industry in India has been influenced by several key factors, and these factors, along with the ongoing innovation, are expected to continue driving the future growth. Let's delve into these factors one by one. To start with, the first is improving mobile teledensity. Now, mobile teledensity, which measures the number of mobile phone connections per 100 people in a given area, has seen a lot of significant improvement within the country. As of 31st December 2023, the overall mobile teledensity stood at 82.95%. Now, if you see this chart, teledensity in urban areas has declined from March 2019 due to the closure of multiple telecom operators and the consolidation of SIMs, but still it tends to remain high. However, there's a notable disparity between urban as well as the rural areas, with urban teledensity being significantly higher compared to the rural teledensity. Now, the telecom players see rural areas as areas of growth due to their lower teledensity, presenting an untapped market which is ripe for expansion. Next is the smartphone penetration. Smartphone adoption is witnessing a remarkable rise in India, driven by several factors. Firstly, the increasing availability of affordable smartphones is making these devices accessible to a wider population. Additionally, the gradual reduction in data tariffs is making internet access more and more affordable, further fueling the smartphone adoption. Rising income levels also contribute to increased affordability, as people view smartphones not only as communication devices but also as versatile tools for productivity, entertainment, and connectivity. Now, despite the growth observed in the smartphone adoption, there's still ample room for improvement, with a significant portion of the population yet to switch to smartphones. Now, this presents opportunities for further penetration and expansion of the smartphone market in the country. Now, the average revenue per user, or the ARPU, is the next factor. The average revenue per user in India is currently among the lowest globally, signaling a considerable potential for improvement. Now, despite a significant rise in usage, the ARPU has not kept pace with this growth. Now, this suggests that there is a substantial gap between the usage of telecom services and the revenue generated per user. A low ARPU in India presents a substantial opportunity for telecom operators to optimize their revenue streams, improve profitability, and drive sustainable growth in the long term. Now, the government initiatives to boost the telecom sector have been aplenty. The government of India has implemented several initiatives to boost the telecom sector. The first of them all is budget allocation. In the 2023 Union Budget, a substantial sum of 97,579.05 crores, which is equivalent of $11.71 billion, was allocated for the Department of Telecom. Now, this funding is aimed at supporting various initiatives and infrastructure development within the telecom sector. Next is the PLI, or the Production Linked Incentive Scheme. Now, to encourage domestic manufacturing of telecom and networking products, the Government of India introduced the PLI scheme with an allocation of 12,195 crore rupees, which is an equivalent of $1.46 billion. Now, this initiative aims to boost local production, create job opportunities, and majorly reduce import dependency. The next is the FDI, or Foreign Direct Investment Policy. Now, the government approved 100% FDI in the telecom sector under the automatic route. Now, this decision is expected to attract foreign investment, facilitate the proliferation of 4G networks, and create a conducive environment for investments within the 5G infrastructure. Next is the promotion of the 5G technology. Now, to accelerate India's readiness for 5G, the government plans to establish 100 laboratories with engineering institutions dedicated to developing applications using the 5G services. Now, this initiative aims to foster innovation, research, and development within the 5G technology space. Next is the Green Telecom Initiative. Now, the government proposed a joint task force between the Ministry of New Renewable Energy and the Department of Telecommunication to promote green technology within the sector. Now, the green telecom concept focuses on reducing the carbon footprint of the telecom industry through lower energy consumption and sustainable practices as well. Now, coming to the major players, the mobile telecommunication landscape in India has undergone significant transformations in the recent years, particularly following key regulatory changes and market events. Now, let's break down some of the major developments for you here. To start with, the cancellation of licenses in 2012. In February 2012, the Supreme Court of India cancelled several telecom licenses due to irregularities in the allocation process. Now, this led to many operators exiting the market or scaling down their operations, resulting in a consolidation trend. Now, relaxation of the regulations in 2014 to 2016, the Department of Telecommunication relaxed regulations on the transfer and merger of licenses as well as the trading and sharing of the spectrum between 2014 and 2015. Now, this move further facilitated consolidation within the industry. Entry of Jio in the financial year 2017, which led to unsustainable tariffs, forcing exit of multiple operators and consolidation within the sector collectively. And then there were also mergers and acquisitions within the sector. Videocon sold its spectrum to Bharti Airtel in 2016. Telenor announced its merger with Bharti Airtel in February 2017. Aircel announced the closure of its operations in 6 circles in December 2017. Reliance Communications announced the closure of its 2G and 3G operations in October 2017. Bharti Airtel acquired Tata Teleservices consumer mobility business in December 2018. Vodafone India and Idea Cellular merged to form Vodafone Idea Limited in 2018. Now, the current market structure. Presently, the Indian telecom market is dominated by 3 private sector operators, which is Reliance Jio, Bharti Airtel, and Vodafone Idea Limited, and 1 public sector operator, which is BSNL. Now, before we delve deeper into the key players, let's talk about the general model of the telecom industry. To start with is the subscriber base. Now, the number of active subscribers plays a crucial role in determining a telecom company's revenue. A larger subscriber base translates to higher revenues as each subscriber contributes to the company's average revenue per user, which is the ARPU. The average revenue per user is a key metric that indicates the average monthly revenue generated per subscriber. Telecom companies aim to increase their ARPU through upselling higher tier plans, value-added services, and retaining the existing customers as well. Talking about the expenses now, major expenses in the telecom business include network operating expenses, access charges such as interconnection charges with other operators, and regulatory fees like license fees and spectrum charges. Now, the investments in infrastructure, technology upgrades, and customer acquisition also contribute to the expenses collectively. Talking about the profitability of a telecom business, it is closely linked to its ARPU and cost management. By increasing the ARPU while controlling expenses, telecom companies can enhance profitability. Now, the factors influencing profitability include competitive pricing strategies, market share, network efficiency, and regulatory compliance as well. Now, the diversification and innovation to remain competitive and adapt to changing market dynamics, telecom companies often diversify their service offerings and divest in innovation. This may involve expanding into new markets, launching innovative products or services, and leveraging emerging technologies such as 5G and the Internet of Things. Now, all of these factors need to be watched out for when evaluating a business. Let's talk about the two listed players in the telecom business, which is Bharti Airtel and Vodafone. Bharti Airtel Limited is a prominent player in India as well as Asia's telecom landscape, with a substantial global presence spanning across 17 countries in South Asia as well as Africa. Now, the company serves over 500 million customers and ranks amongst the top 3 mobile operators globally, with its network covering over 2 billion people. In India, Airtel is the largest integrated communication solution provider and the second largest mobile operator in Africa. Now, despite its impressive growth trajectory, Bharti Airtel encountered challenges post FY16, particularly in the face of heightened competition and increased investment in the spectrum. Now, the entry of Reliance Jio disrupted the market with aggressive pricing strategies, putting pressure on the existing players like Airtel. Additionally, the transition from 4G to 5G technology necessitated significant investments in spectrum licenses, which impacted the company's financials. However, Airtel responded to these challenges with a lot of resilience. It introduced competitive data plans and upgraded its network infrastructure to meet the growing demand for high-speed internet connectivity. Furthermore, the company diversified its business portfolio by venturing into new domains such as digital payments and cloud services, thereby enhancing its long-term growth prospects. Now, the consolidation in the telecom sector has been advantageous for Bharti Airtel. Market share gains, average revenue per user improvements, and controlled costs have bolstered the company's profitability collectively. Going forward, Airtel anticipates 2 catalysts for ARPU growth. Firstly, it is actively implementing tariff hikes to improve revenue per user. Secondly, the company expects an increasing proportion of high-value 4G or 5G customers, which could contribute to ARPU expansion. Now, these factors, coupled with strategic initiatives and market dynamics, position Bharti Airtel for a positive trajectory in the coming years. Now, the next company we'll talk about has been facing an uphill battle in the Indian telecom industry. Now, before we get into any details, let's understand the ups and downs that Vodafone India has faced in its journey and where does it currently stand. Now, Vodafone's entry into the Indian market was back in 2007. Vodafone India made a significant entry into the rapidly growing Indian mobile phone industry. At that time, Hutchison SR was thriving in the Indian telecom sector, while Vodafone held a prominent position as the largest telecom company in the UK. Vodafone decided to expand its operations into the Indian telecom market, recognizing the immense potential and growth opportunities it offered, and bought over Hutch SR for $10.9 billion, which is approximately 46,870 crore rupees. Vodafone India then made several improvements. They invested more money to enhance the network, which led to smoother internet access, to quicker message delivery, as well as to clearer calls. Now, customers were delighted because they were experiencing better services than ever before and then better than any of the competitors at that point. Now, despite facing fierce competition from well-known companies with the likes of Reliance Communications, BSNL as well as Airtel at that time, they quickly grew their customer base to over 100 million users by 2010 as proof of its successful strategy and great execution as well. Next came the era of the 3G. Now, Vodafone made large network upgrades in order to provide high-speed data services. Now, this was a timely move because data consumption increased at the same time as smartphones became more and more popular. They even did aggressive marketing campaigns like the ones we remember of the Zuzus, which used to come during the World Cups and a lot of matches as well. Now, Vodafone then took it a notch higher, announcing its merger with another emerging player, which is Idea Cellular. Now, the merger, valued at around $23 billion, aimed to create India's largest telecom operator, at that time surpassing Airtel in terms of subscribers. Now, the primary motivation behind the merger was to build a stronger company capable of more effectively competing with rivals like Reliance Jio and Bharti Airtel, particularly after the disruptive entry of Reliance Jio with its aggressive pricing as well as innovative offerings. Now, though the merger initially was a game changer, making it the leading player in the telecom space, boasting a market share of 36.5%, it soon had troubles one after the other. As you can see in the chart, into October 2018, Vodafone Idea was the leading player, but there was another mammoth of a player emerging, which is Reliance Jio, quickly rising to fame. As on 31st March 2024, Reliance now leads the pack with 40% market share, followed by Airtel closely behind at 33% market share, and then comes Vodafone Idea at around 19% market share only. Now, interestingly, more than 92% of the market share is held by private access service providers. Now, the declining market share and losing subscribers is not the only problem that Vodafone Idea is facing. Vodafone Idea incurred significant problems, one of which was heavy borrowings or indebtedness along the way to keep up in the competitive landscape, amounting to 2 lakh crore rupees. In fact, 97% of the total loans are owed to the Indian government in the form of AGR liabilities and deferred spectrum payment obligations. Now, what's interesting to note is that as on February 7, 2023, Vodafone Idea allotted 16.13 billion shares to the government of India, converting the adjusted gross revenue or the AGR's dues until FY17 into equity shares. Now, following this allotment, the government of India now holds about 32% in Vodafone Idea Limited, making them the largest shareholder within the company currently. To tackle the ongoing issues, Vodafone Idea also issued a massive IPO of 18,000 crores to pay outstanding dues to the Department of Telecommunications and also expand capacity of the existing sites and set up new 5G sites. In fact, this FPO was subscribed more than 6 times. Now, let's look at the financials. As you can see on the chart, the sales have shown an overall upward trend, growing to 19,489 crores in FY12 to 42,177 crores in FY 2023. Expenses have also generally increased over the year, rising from 14,440 crores in 2012 to 25,424 crores in FY23. While sales have increased, the corresponding rise in expenses has impacted profitability. However, what's impressive is that the company exhibits strong operating profit margins, translating to almost 40%, showing good operational efficiency time and again. But when looked at the bottom line, the losses widened to 29,301 crore rupees for FY23. In fact, the net profit has been consistently negative from 2018 onwards, with the largest loss of 73,878 crores in 2020 alone. Now, the EPS has followed a similar pattern to net profit, turning negative from 2018. The most severe decline was again in 2020, with the negative EPS of 25.71 rupees. If looked at the key matrix, ARPU, which is the average revenue per user, has seen a consistent rise to 145 in Q3, adding to the top line revenue. However, the company has seen a decline as subscribers as well as competitive rates and services are offered by the competitors as well. Furthermore, the borrowings and the outstanding dues have been significantly adding to the woes of Vodafone India. Now, to conclude, despite the massive FPO of Vodafone Idea, or VI as they are now called, it's not all rain and sunshine for them yet. They face intense competition in the Indian telecommunication industry, primarily from companies like Airtel and Jio. Additionally, the financial woes in the form of debt payments, the ongoing legal proceedings could potentially divert its resources and have a negative impact on its reputation and financial health if outcomes turn out to be unfavorable for them. Now, only time will tell if Vodafone Idea's bet pays off, allowing it to compete in the highly competitive Indian telecom sector, or will they vanish? Now, for an investor like you and myself, when considering investing in the telecom industry stocks, there are several important factors that we need to take into account. Now, let me walk you through some of these key factors. Firstly, it's crucial to keep an eye on the industry trends. Now, this includes staying updated on advancements in technology, changes in the consumer behavior, and any shifts whatsoever in the regulations. Now, understanding these trends helps us anticipate how the telecom sector might perform in the future. Now, competition is another significant aspect. The telecom market is highly competitive at this point in time, with companies constantly battling for market share. There are price wars going on every day. Companies with a significant and a growing market share are usually better positioned for long-term success. Now, we should also consider how much a company is investing in capital expenditures, particularly in the network maintenance as well as the upgrades, as this can impact its future growth potential. Financial health also is paramount. Before investing, it's essential to thoroughly analyze a company's financial health and its performance. Now, this involves looking at metrics such as revenue growth, profitability, as well as debt levels. Now, we want to invest in companies that are financially stable and have a solid track record. Now, the regulatory environment, which we already spoke about, is something else we need to keep an eye on. Now, the telecom industry is subject to strict regulations, and changes in regulations can have a significant impact on the company's performance. Now, being aware of the regulatory changes and how they might affect our investment is extremely crucial. Finally, stay informed about the technological advancements, the consumer behavior patterns and changes, and the regulatory shifts to understand future performance of these businesses better. With that, this is Raj Mehta signing off, wishing you and your loved ones the very best. Take care and stay invested. Thank you.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.